Welcome back, and joining us for a look at the day's markets action is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. Now, another layer has been added to the U.S. political landscape. Of course, this is after the announcement that President Joe Biden has pulled out of the presidential race. Have markets changed their pricing of the election outcome here?
Thanks so much for having me tonight. If we look at how markets behaved last week, it was the Trump trade. It was that rotation out of the big tech stocks into the smaller cap US-based stocks. You know, the companies that Trump is going to make great again. We saw strong dollar as well as a strong gold price. But today, with Kamala Harris as the likely Biden replacement, we've seen a reverse of the Trump trade. We can call this the Harris trade. We can call it the Democratic trade. But big tech is up. Green energy stocks are up, electric vehicles are up, so we're seeing Tesla up close to 5% today, and smaller caps lower. So let's see how it plays out. But I think the Biden withdrawal, it resets the race to some extent.
I love these names also that we give these trades, the Trump trade or the Kamala trade. It's going to be quite interesting to see how markets digest all of this in the coming months. Things that the JSE digested today, a number of company news and updates out. Let's start off with Mr. Price. They came out there with quarter one trading update, reporting sales growth that was ahead of the market, posting market share gains, also a widening of margins. I don't know, is this a surprise considering, the still constrained consumer environment, or just exactly what markets had expected here?
I thought those were a really good set of numbers. If there's no economic growth, which is what we've seen in South Africa for the last decade, the only real way to grow is to take market share from competition. So, well done to Mr. Price on being able to execute just on that. So quarter sales growth was 4.6%. You mentioned the gross margin increases. What I thought was quite interesting is that all their divisions had gross margin increases, which is pretty impressive. So I saw it as an encouraging update from Mr. Price. They also mentioned lower inflation, lower interest rates in the near future, the two-part retirement system. These should all be beneficial for the consumer spending environment and should be positive for the likes of a Mr. Price. So the shares were up 2.8% today.
Yeah, it's actually quite interesting that the kind of investors flocking to the retail space, that actually hasn't stopped. Of course, we know the big optimism that we had after the announcement of the GNU. So it's quite encouraging to see also that these companies are coming out saying that they also expect the economic climate to support them going forward. Let's take a look at the commodities scene. Anglo-American Platinum, they're coming out with its interim results today. We did see core profit declining 8%, headline earnings per share down 18%, but some positive metrics, including refined PGM production up, also sales volumes increasing. I did see that the shares of Amplats continued to rise. Of course, we did see them rise initially on Friday as well after they released their trading update. Are markets at this point pricing in a bottoming out of Amplats' woes?
I'm not too sure with regards to the bottom, but I thought operationally those results were pretty good. Like you said, earnings were down, but if you look at what the PGM dollar basket price has done, it's fallen way, way worse. Yeah. So given the challenges in commodity prices, that's a pretty good set of results. And the shares were up nicely today. Planning to demerge from Anglo-American, looking at a secondary listing in London. So all positive news, and the shares were up 3% higher.
Yeah. Do you think also maybe markets are a bit more confident about the demerger from Anglo-American? Because there was a time where investors were just dumping Amplats, of course, anticipating the impact of that unbundling and unbundling, yes. Yeah.
I think that as well as I think that secondary listing in London, that's all kind of positive for shareholders. I thought pretty good update from the company.
An update that clearly investors did not like came from South32. They did have a quarterly update and also another update on its Western Australia Worsley alumina operations. Yeah. There we did see the share price plummeting by more than 12%. What exactly are markets nervous about here?
So if we just focus on the results first, the results were weak on the production as well as on the pricing side. But that Worsley mine that you mentioned, there was a massive impairment, and I think that's why we saw the shares down 12% today. So if we go back to 2019, South32 put forward a mine development project for this mine. and the West Australian Environmental Protection Agency, it's a mouthful, they've come back to them with a set of conditions that make it just not financially viable for them to mine. So hence the massive impairment of over 500 million US dollars. We woke up this morning, we saw the shares were down 12% in Australia, and we follow suit this side in South Africa as well.
Yeah, and this is actually quite interesting because we're seeing a deepening of investors fleeing that stock. Even on Stockwatch, there have been viewers asking why South 32 has underperformed all the other commodity counters. I guess this is also adding to the nervousness there. Well, Andrew, let us get to your stock picks. What are you choosing today?
Sure. So Nati, my stock pick today is Louis Vuitton, or LVMH. So with AI and the rapid changes we're seeing in technology, we often talk about how the world will change over the next 5 to 10 years. But I think we also need to invert that question and ask ourselves, what will not change? What's unlikely to be disrupted by AI? And I think luxury is not going anywhere. Louis Vuitton's been around since the 1850s, so that's 170 years old. The shares are down about 20% over the last 12 months. The consumer discretionary sector as a whole has been under pressure. I don't think they're bottoming yet, but maybe they're close to it. But Louis Vuitton is a really strong business with temporary headwinds. So the long-term investors out there, I think that's one we should be looking at.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money in today's session. That was Andrew Padoa from Sasfin Wealth.